commentator. Joining us now in an exclusive interview is Steve Schwarzman, Chairman, CEO and co-founder of the Blackstone Group, author, of course, of What It Takes, Lessons in the Pursuit of Excellence, which is just out. Steve, so good to see you. Thanks for joining us.
Oh, it's glad to be here.
This book is full of so many of the great examples, not just, as you say, in the pursuit of excellence and success, but examples of deals that have led to much greater good following the investments you've made. Does it annoy you when you get criticized in an industry? And do you think from a comms perspective, the private equity industry has perhaps failed to highlight successfully the good it has done in the last 20, 30 years?
Well, I think it's hard to highlight it when you have the political environment by a limited number of people grabbing that megaphone. And it's impossible for any private person to deal with that on an equal basis. What I would say is that a lot of that that you've just heard is not supported by reality. The concept of the legislation that was introduced about looting really is inconsistent with what we do. What we do is we buy assets, say we buy a company, and we make them better. Why do we make that company better? Because that's how you can sell it to someone else for more. Mm-hmm. If indeed the entire industry was premised on looting and ruining companies, no one would give us any money to manage, because at the end of that sequence, you'd be selling these assets for less than you bought them. So no one would ever fund you. As it works out, over the last 30 years, there's been enormous growth, and companies like ourselves end up having companies that we own that grow faster than the S&P, so we can sell them for much more. So as it works, Wilfred, we end up earning about double the S&P, and the people who benefit are all the retired people who give us money. So ironically, we're trying to help society. We are doing it. And for whatever the reasons, a narrow group of people have decided that this would be an interesting target.
If we go one step further to the clash at the moment between politics and business, and just focus on China rather than domestic issues, where clearly there are differences to how things are done to here, whether it's the Hong Kong protests or the absence of freedom of the press or free speech. Do you think companies should be criticized for making profits in those sorts of environments?
Well, I think companies tend to invest globally unless they're prohibited to do so by their governments, which happens in a lot of places. As to the U.S. and China, together these countries represent, depending upon how you calculate it, between 35 and 40% of the entire world's economy. These aren't just two random countries. And what happens between them has some major impact. So there's discussions going on regarding trade issues. Hopefully those can be resolved so that markets can be opened. Regarding issues like Hong Kong, which everyone is focused on, it is very difficult to figure out what's going to happen there. They had big turnout on the elections, I guess, yesterday for the pro-democracy party. China is a situation where in Hong Kong itself was given to China as the result of the lease expiring in 1997. So China believes it's their country with two systems of government until the late sort of 40s coming up, when it all reverts to China. So it's a complicated thing to figure out what to do in the interim. And for people like us, we have sort of humans. We have an office in Hong Kong, as do many people, and we're concerned, of course, about protecting our people.
When it comes to the political environment, Elizabeth Warren also has made a pretty vocal opposition to the wealth that's been created by billionaires and how she thinks they should contribute more to society in the form of a wealth tax. I imagine you're probably not in favor of that, but do you think others like yourself should perhaps band together and come up with a better solution so that you can help address that? I know you've been very charitable, of course.
Yeah, well, I think regarding the wealth tax, there have only been 12 countries that have tried that. And of those 12 that tried it, only 4 are still trying it. I've seldom seen taxes go away. So the idea that 8 countries decided that wasn't going to work is no surprise. And I don't think that would be successful in the United States as well. I think we've got a problem in our society. And, you know, part of it is that I call it income insufficiency rather than income inequality. There's always been income inequality in the United States. But what we have now is a significant group of people who just aren't earning enough for a variety of reasons. One is globalization, where wealth moved around the world. Another is, I think, insufficient education. And, you know, the United States has fallen from one of the top primary, secondary education systems in the world when I was in school back in the late Middle Ages. And now we're somewhere between 25 and 30. And in math, certainly in the 30s. Just to give you an idea, in China, for example, they're now moving to where 100% of students are going to have computer science education. 100%. We probably have maybe 5%. Computer science is the world of the future and the information age. If we don't change and modernize, we'll fall farther behind. And that disadvantages not the well-educated, but the people who aren't as well-educated. And we have to address that problem by getting better teachers. And to do that, I think we should have teachers, to attract them, be the only occupation that doesn't pay tax. And what that will do will be to increase the money going to teachers, but it will also mark them apart from other occupations in the United States and say we really value that. So we can increase the quality of people going into that occupation.
Steve, switching focus, if I may, to the stock price, Blackstone stock price. Can you believe it's up as much as it is since April, since you announced the plans to switch the structure?
Sure. You know, the stock price is right behind you. I know.
You're up 2.2% today. Well, you were up 2.5%. So, Steve, yeah. The last 20 minutes you slipped 0.5%. But
yes, so I must have said something wrong. But the stock has outperformed since we went public about 1.7 times the S&P. And this year it's up somewhere around 75% because we converted from a master limited partnership to a regular C corporation. So what does that mean in English? What it means is that before we converted, only about 1/3 of eligible buyers could or would buy a master limited partnership because it had certain tax forms that went with it. When we got rid of that form and went to be like a regular corporation, all of a sudden we had 3 times the buying power. And the company itself is growing very rapidly. It's in the fastest part of money management. You know, now the alternatives are growing quickly, index funds are going quickly, and long-only managers in between are basically shrinking. And so we're the #1 company by far in the alternative area.
Do you fear a price war that we've seen play out amongst the brokers? We've seen it in active long-only managers with the advent of more index funds. Do you fear a price war in your space as well?
No, I don't, because in our space, you buy something and you own it for 5 to 10 years. And if you've given money to someone who's not much good at that, you're in real trouble. It's not like you sell your losers. You own them forever. And so for the top performing firms, and there's an enormous measurable bias that the top performing firms, for a lot of reasons, stay as the top performing firms. If we've averaged, double the S&P, the idea that you would be subject to a normal type of fee pressure people are grateful to get that kind of return. And so we're not experiencing that.
Steve.